Hello guys, and welcome back to another Elliott Waves on Cryptos. It's been less than a week since the last video, and I'm gonna start to make them a little bit more often, so that we have you have more regular updates and keep monitoring and tracking of the markets first of all, and then directional movements as well. Last time I did mention, and I've been mentioning actually for quite a few times, that the alternative becomes a bit more likely. I did also mention that in case we remain below the key level of 23k for more than 3 days, okay, that would really confirm, because it is a confirmation of a breakout of the 23k, which means it becomes effectively much harder to break back above the 23k. So I'm gonna have a quick look, of course, at the alternatives and the variations as well of the main, but I mainly want to tell you that there has been a change on BTC, and that also includes, of course, the Ethereum count. But for the last few hours, I would say we've seen a change in the voting from the QIC team or community. I was going to do Ethereum, and then suddenly that switched to ADA. I'm fine with it. ADA is also a great sort of project, I would say, blockchain slash long-term cryptocurrency to potentially keep in for the long term, for holding, or to engage in some sort of trading activity for the longer term. So we are going to have a quick look on BTC first, and second on ADA. As a reminder, you can also find me on Discord. There is a free version and a paid version. This in the channel, in the subscriptions, you can find information about how you can join should you wish to do so. At the same time, let's not forget that we are into summer, okay, and summer is not usually the best market environment for potential sort of pumps to the upside without a dump to the downside. You might say, well, last year that happened. Well, trust me, last year was a very, very special situation there, where I was also very, very surprised to see how we went up without volumes, and I was insisting that I don't see how we're gonna get higher up. Either way, let's go to the charts, guys. Have a quick look on BTC as quick as we can, and also ADA. This time I want to start with the Brave Index, guys, because the Brave Index has all the data available. I will tell you, I am not convinced with this count that you're going to see. I will explain why, but it would otherwise seem to be a case that we are done here, a supercycle move, sort of, which doesn't make much sense duration wise, because we need more legs up around 15 to 20 years to complete the supercycle, right? And that's one thing to remember. The other one is that if we're gonna revisit levels of corrections to a supercycle degree, then that would be very, 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 very low. And I'm not talking about 9, I'm talking about much lower, because I talked about 9k. So there we are. We'll have on the weekly For those who have been following me for a while, you do know that I had a different count here. Okay, I had a 1 and 2. No, actually I had this. I had, hold on, what was it? It was 1 and 2, 3, 4, and 5. Okay. Now, and I had this because of the volumes, guys. Okay, and this is what I mainly look to identify which wave we are on. Now, I will tell you that I'm not liking how volumes are falling as we go up on the third wave. I don't like it at all. Okay. But we're going to look at an alternative, okay, of this. The idea of, you know, having this as wave 1, you know, and it gives us a third over here, which is good, you know, and then a divergence with the fifth. This is perfect. This is a correction wave, so we don't want volumes up. This is, you know, a lot of volume coming in, yeah, so it could be a second or it could be a fourth. I would really, if we look just at the volumes, this is more likely 1, 2, 3, 4, and 5. Okay, and the 5 could be 1, 2, 3, 4, and 5 because we haven't really gone below that level yet. But at the moment we fail, then it would mean that our 1 is here. That's 2, that's 3, that's 4, and that's 5. And that doesn't make much sense because the 1 and the 2 are very, very small to belong to the same structure, right? So losing this level, which is very close to happening, guys, it's very close, and that's where I don't combine with how volumes are looking. I'm not going to give you the scenario that it's based on volumes, okay, because of that reason, because I believe we're going to cross below wave 3 here fairly soon. So I'm giving you this, which doesn't come with sort of friendly volumes when you look at the impulsiveness of this leg. The assumption is that wave 2 is very, it's got a lot of volumes, but guidelines says that usually this is our fourth, and then wave 1 has most of the volumes rather than the wave 3. Either way, the 3 extends more than the first, okay, and the 2 can be considered as, you know, a lot of volumes preparing to shoot higher, okay. So guidelines are guidelines. We don't necessarily need to see things happening you know, certain way all the time, especially in cryptos. What we do know for sure is that that's a fifth. These volumes are actually matching for a fifth, okay. So this is the long-term count, guys, and I also showed you another alternative, which could be 1 and 2, 3, 4, and 5. I will show you now, and that's gonna come down, okay, and then we're gonna go up. That means that our wave, well, all of this is going to be the first one, okay, and that could explain why we have low volumes, okay. As I said to you before, according to volumes, 1, 2, 3, 4, and 5 is more like a case here, but I'm gonna stick to this. Importantly, and I've mentioned that to my group many days ago, if we look at the base channel of waves 1, 2, okay, we've actually entered that territory. And not only did we enter, it's also 1, 2, 3, a fourth day that we're closing inside this base channel. That makes the outlook for the short, medium, and maybe medium long term bearish, guys. And as long as we are, to be fair, below 25, this level, we are, there is no hope for even some sort of relief rally here, okay. So with that said, let me now just go to our BTC, okay, not the index, and look at how things are unfolding. As you recall, I was just saying that I've made a change, A, B, and C down, okay, and we'll have potentially something like 1, 2, 3, 4, and 5 here. 1, 2, 3, and 4, and the fifth is missing. The fourth maybe is not done yet. We're going to find out. Since we are here, obviously, it's worth adding this channel over here and see where we stopped exactly. So we cannot ignore the fact that the trend is now accelerating to the downside as well, okay. which means, guys, okay, that doesn't necessarily mean we're gonna have this structure being printed. It could be something else. For example, we can add this here in the main. Yeah, okay. For example, a variation of the main could be that this is wave 1 and 2, this is 3 and 4 and 5. Still, we would probably expect one more leg down, right? So this leg, it remains sort of similar. That's the only case we can actually have a decent move up to around the 33K, perhaps, okay? But as long as we're below by the first over here, there is no hope. And from there, of course, the expectation is to move lower down again. You see, that is the main, but there is still an ABC to the downside. However, the ABC, it's different, okay? Equally, we can have a WX and Y. That is the hold on, that's the variation. And that's the alternative, which was our main, by the way, right? I'm not going to go there. You know exactly what this is. This is another variation of the cycle that contains a WX and Y double zigzag instead of, you know, a simple zigzag. And also one that we've looked at before as an ABC. If we start seeing a move to the upside, guys, if we're lucky and we see something like this and we overlap, perhaps we're going to get you know, an ending diagonal in wave C. As you can understand, of course, this ending diagonal, you know, because we have to measure the first versus the second to get the third, you see it's going to be a contracting diagonal, which also means that in case we start moving higher, okay, our wave 4 cannot be larger than our wave 2, which means if it lets me do it, sometimes this mouse really annoys me, then our fourth would be around 26K, okay? So these are all the counts, guys. So back to the main. Yeah. What do we look at? A and B, supposedly. Where are we going down to? 19, 17, 60, 1480. These are all potential levels. Now, down to around 1750 or 60, guys, that can still be assumed a case where, you know, this is not such an extended move, because we can also make an assumption that this is 1 and 2, when I get 3, 4 and 5, and then B and C, right? Much bigger correction in its entirety. But below, you know, as long as we're above this level, I would say, okay? But I'm changing counts usually when we get the 1618 or something more important, okay? Now, these are the levels that we need to pay attention to. Another level that we can pay attention to is by using the net distance through the waves 2 and 4, well, 0 and 4. Look at this, the 1480, it really becomes a level, guys, right? I mean, this is pretty much done here. It's a lost case. But the 1480, 15K becomes a level. Then after that, we'll go down to 9. Okay, remember that. And just finally, and if we assume, of course, that the wave 4 is in, based on that assumption, we can use the measured move. That brings us around the 1750. So these are the levels to remember. Of course, in the interim, 1930, 19 and 18, yeah, 1850, okay, and yeah, and 18 to 42 are levels for the short to medium term. Okay, good. Now let me go in the short term, okay, and explain to you what I see and why. You probably have spotted over here that I do have a WX and Y, and wave Y ends as a triangle. I want anyone who sees this and has a different count to explain to me in a comment or send me an email. How are you making this a wave 1? Because I've seen so many do this as a wave 1. There is no wave 1 here, guys. This is a clear correction, clear. Because this wick over here doesn't just appear on Binance, it appears in every single exchange. So this is an ABC. Okay, there is no chance you can call this a 1 because there is nothing else to call. Now, I do have a triangle here, but there is also a few things I need to mention here because I don't even like the triangle, guys. Okay, I've been very consistent in respecting the truncation rules, which is 70% truncation. In Forex, this is a little bit different. We can go down to 61.8, okay? And some guidelines and rules can be stretched if we look at the euro. I don't want to say rules can be stretched, but it's just simply what I'm saying, guys. And if you're coming from the research side of things, you understand that sometimes, because there is new markets as well, new rules and guidelines are coming. I'm not saying I found the new rule and playing the eureka time here, but what I'm saying is that I don't actually have anything else that makes more sense than this. It's wrong, and I'm not going to use truncations again just because I did it once that they are below 70%, but I don't have anything else that makes sense. This can be 1. Yes. What are you going to say? This is 1 and 2? Or this is like 1, 2, 1, 2, 3, 4, and 5 for like a diagonal? Crazy. What is this? Look at this. Because that's the second one that makes sense. And even though that doesn't make sense. Why? Because there is no diagonal here. That can be, as an ABC only. You know, you cannot have a double X and Y in an actionary wave, in a leading diagonal or an ending diagonal. You cannot. Only the corrections can be double zigzags, right? So I'm asking anyone, any analyst there, how do you explain this? That's my only explanation. And I'm not saying you have something wrong. I'm saying, I'm actually asking, do you have something different? I want to know, because the only thing I found making more sense than everything else, or being less unlikely, you know, I'm not saying this right, it's that this is a triangle. And the triangle, by the way, would be A, B, C, D, and E, right? I also thought about a triangle in E, but it didn't come out because we had this wave down. Okay, now you might say A, B, C, D, A, B, C, D, E, and we stopped here. Fine, but then where's your C? Your C cannot be here. You know what I mean? And then I thought about this, A, B, C, D, E. And then what do you make of this? You don't make anything of this. You understand? That's the issue. So the only thing that makes sense to me over here is a W, X, and Y, and then off up for E. So with that said, we are on to the last wave to the downside. 1, 2, 3, 4, and 5. Now let's look at this for a little bit. Okay, there is two scenarios here mainly. One assumes wave 4 is done. That's why I have the red one here. If wave 4 is done here. This is wave 1 and 2, and we're off to see a 3, 4, and 5 internally, then 4 and 5. Okay, and we end whatever the levels we called. Now, the other assumption is that wave 4 is not done, and it's going to be 1, 2, 3, 4, and 5, and A, B, C, D, E as a triangle. Okay, so we would be looking, and we should be looking for anything above like around the 70%, which is going to be around 22K. Okay, for wave E to end. Okay, that's what I'm saying. I've seen I've seen flat here. I personally don't see a flat because I don't see a wave C. How would you label this? 1 and 2, and what? 3 and 4 and 5? How would that work out? Let's look. This is as a 3, it's bigger than 1, which means we need to have what? An open diagonal, correct. But then, if you measure the wave 4 versus the wave 2, 4 is smaller. So we cannot have an open-ending diagonal. Okay? On a different note, you know, some might have thought that this is 1 and 2, and then 3, 4, and 5. But in that case, there is no overlap here. So even if in this particular case, you know, we cannot have it because it's supposed to be ABC, 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 ABC. Yeah, but there is no overlap here. So if there is no overlap, it has to be 1, 2, 3, 4, 5. So 1, 2, 3, and 4, and 5 again, it cannot be because, you know, it's overlapping this. So I don't see a wave C here for a flat. Okay, probably W, X, and Y. Okay, got W, X, and Y. That's what I see personally. Okay, which means this is probably 1, 2, 3, 4, and 5, or like an open diagonal here as A. That's B, and that's C. Okay, because we can only have one complex correction in triangles. So this is my short term with its alternative and the variation. Do I have something for the variation? Yeah. Well, yeah, that's not as much of a short-term thing, but yeah, it's the 1, 2, 3, 4, and 5 I was talking about, the A, B, and the C. Yeah, so I should actually have the variation. In the variation, I should have something different, but anyway, I will show you here. Let's look at this. Let's go down to the 4. 1, 2, 3, 4, and 5. And we end. And that's the end. But then, how do you explain this? Because I was just trying to, I was explaining how that doesn't make anything else than a W, X, and Y. You know, that doesn't make anything else but a W, X, and Y. So how are you going to call this anything else than a W, X, and Y? Well, maybe, you know, we just need to get this one more leg down, and then, you know, perhaps we will start accelerating in this alternative. Now going on ADA, because there is no more BTC to talk about. I mean, in terms of, you know. So let's look at the main scenario, guys. Main scenario also, well, it's a bit bullish, to be fair. Because some of you might have wondered what's going on. There is a huge interaction here. You know, I mean, wave 1 is up here, by the way, right? So you see, we've already interacted. So you might think, how is this? Since we have this interaction here, it means that it's an ABC, or it's some sort of leading diagonal. What, you might be asking yourself? It still might be a leading diagonal, by the way, right? Something like this, but I don't think I'm gonna go there. For now, what I will do is assume this is a supercycle wave 1, supercycle wave 2 down here, and we're starting off a third wave. Okay, a third wave that actually has these volumes are decent. These are the volumes that I want to see, guys, coming in. You see the first, the second, the third, the fourth, and the fifth. This is the perfect distribution according to Elliott waves, okay, of volumes. Wave 1 a little bit up with a third one with high volumes. Wave 2 has the lowest volumes. Wave 3 has the highest volumes, diverges with the fifth. The fourth has big volumes, more than the second, okay? Kinda, you've got, you know, because it's a triangle, it's losing a lot of its thing from mid onwards. And then the fifth one up, again, another divergence. This is the perfect distribution for volumes in Elliott waves, okay? So, expectation, A, B, and C. We do have one more leg down apparently here as well. And after that, off we go. Now, we did tag the 38.2, which means in the medium term / long term, the next level down is at 23, okay? Then down at 1250. Yeah, but we need one to break first at 1569. So what else do we see though? Because we cannot just use the Fibonacci retracement, guys. We also want to use the Fibonacci extension here between waves 1 and A and B. And look at this. It looks like the equality between C and A has not really taken place yet. And that is a little bit lower at 3689. Okay, we have a very big cluster at 23. So I'm afraid to tell you that this is a magnet zone. So in case we do break 3717, there is good chances we're going to go down to 23. Okay, because it's a cluster. Now, is this a cluster a strong cluster or not a strong cluster? Well, look at this. If we use the net distance through again, these waves, we get in 35 and we get again around 22 or so. So 23, 22, guys, I'm going to tell you now for a fact, it doesn't make much difference. Okay, we are in volatile cryptos. So now, this is the expectation. The other thing we can do, and assuming of course the fourth is in, measured move, look at this again, 23.72, exactly at this level. So I'm telling you, this is a huge level, 23.72. That is cents, I repeat. And then in the interim, 35, 33, 29. Okay, guys, and this is the main. Now you might say, well, what about the rest of the stuff? What if this is not the right one? Well, I can tell you that. This is one of the variations that I'm looking. Okay, actually, let me leave this open. This is one of the variations I'm looking. Okay, the variation I'm looking is that we are not done with wave 4 yet. And by the looks of it, A, B, C, D, and E, it's reminding very nicely an open triangle. Okay, an open triangle. So it means that, you know, we can go all the way up to do the 70%, which is around the 60, and from there start moving lower once again. Okay, for the fifth, which we just identified a few levels on. I have an alternative scenario, which is also very likely if we look at the structure. I'm going to show you the difference so you can spot it too, and a variation for the alternative. So the alternative is this, guys. Earlier we looked at this as 1, 2, 3, 4, and 5. Okay, and we looked at this as an ABC for B. Now what we're doing is we're looking at this as 1, 2, 3, 4, and 5. That's our B, very short. And this is 1 and 2, and 3 and 4 and 5. Now, why am I actually giving you this alternative? There is two reasons. Okay, reason number one, you know, according to the guidelines, and we're looking at reason, it's the same reason, guys, but we're looking at reason A for wave A and reason B, or reason C, let's call it, for wave C. 1 and 2, as you can see, actually should be probably here. Yeah, maybe. Okay, let's just leave it there. It's just the corrections much more. Okay, in this particular case, we have a weird wave 1. It's like probably an open diagonal or something. Okay, and then you got a wave 2, just a W, X, and Y. Then you got an ABC here. Okay, but these two corrections, they look like they belong to the same structure. If we had B here and A here, and you know our wave 4 would be this, then it's kind of extended a bit too much. Okay, that's one of the reasons. And the other, most importantly, in wave C, if this is 1 and 2, 3 and 4, then the 4 doesn't match a lot with wave 2, does it? Okay, so that's why it's mainly the wave C that you know we are dealing with this issue. ABC. So hold on, guys. I've spotted a mistake here. Apologies. There we go. Okay, so that's the alternative because we have a better match between waves 2 and 4. Guidelines say we have one sideways or long or deep, and the other one is exactly the opposite. So if we've got an ABC here and we're done, then that is a good match because we've got a flat and we've got an ABC, which means we're heading lower down, right? But I'm going to show you quickly, before the short time, the variation alternative. Okay, the alternative on the variation sees that we're going to have an A, B, C, D, E, okay, and then we're going to get 5. Why again? This is a slightly okay match. It's not because we have two sideways markets, obviously, because you know it's not in the guidelines. It's because of the duration, okay, because it is possible to get a flat and a triangle, okay, in wave 2 and in wave 4. But we do prefer, that's why is the alternative of the variation, to follow the guidelines that we have of the alternation, right? A flat and a single zigzag. Now, in the shorter term, and back to the main is A and B, don't forget. 1, 2, 3, and 4. Okay. So let's go a little bit further in here. Let me just close this now. We don't need it any longer. And as you can see with the fourth being done here, we look at 1 and 2, we look at 3 and 4, and then one more done for 5. As you can see, as well as I can, this is an ABC. And I've got an ABC here so you can understand that, you know, an ABC in wave 3, it's only a diagonal, right? So you got 1 and 2, you got 3 and overlap with 4, 4 and 1 overlap, which means I'm expecting what? A diagonal. Okay, now we need to see what diagonal do I expect? I expect. Now we need to measure 1 and 2, see where the 3 is. The 3 is obviously 161 of 2, of 1 and 2. So that means that, you know, it's quite extended for a diagonal, but it doesn't matter because it's an expanded diagonal. So what we want to confirm now is that our wave 4, it's bigger than wave 2, okay? Because on open diagonals, wave 4 has to be bigger than wave 2. Now, if we use that same length, you see that wave 4 is indeed bigger than wave 2. But there is an issue. Look at this. Does this look like structurally like an open diagonal or a contracting diagonal? You got it right, a contracting diagonal. And it can also be a W, X, and Y. So the main is indeed, because we're not looking at the structure now, we're looking at the guidelines and the rules, that we're going to get ABC, we're going to be done and then continue higher. Okay. But also, there is good potential that this is going to be a W, X, and Y. We're going to get a deeper 4. We're going to get a decent structure as well. And from there, we'll go lower down. So there is good potential for upside on ADA versus, well, BTC could do the same as well because we identified, we actually talked about a lot of the potential scenarios, right? So that's the short-term variation as well, guys, right? So let me just quickly check something. Okay. Yeah, so the most important thing to remember is this, okay? Thing number 1, 4 and 5 for a decent open diagonal, or it might be a triangle, open triangle, which will go up again to this pretty much same levels as 4. Okay, so, well, either way we look at it, you know, there is the expected downside here. Or, guys, I'm also looking at, because we cannot ignore this, as 1 and 2, yeah, and that might be our wave 1 and our wave 2 of an extended third to the downside, 3, 4, and 5. So what I'm saying is that maybe the third is down here, and we're going to get 1, 2, 1, 2. So 1, 2, 3, 4, and 5, which means this is only one of 3. We're going to get 2, then 3, 4, and 5, or 3, 4, and 5. Okay, that's going to be all. Thank you for watching. Don't forget all the information on the caption. If you want to join the Discord group, it's free. There is also paid version. So take care, trade safe, and we'll try to do another video next Friday.